What's up, everybody? My name is Jackson. This is GNS Academy. If you don't know, GNS stands for Grind Never Stops. This is going to be a series, an A to Z series from introduction to futures. What is futures? What can you trade in futures? What are candlesticks? What are prop firms? Right? Just an introduction. And then by the end of this, you'll know how to trade, execute, make money. Okay. Um, so this is just the beginning, A to Z, right? A little bit about myself. I am a profitable, consistent day trader for about a year and a half now. I've been trading for 4 years. I started with Forex and the IM Academy stuff, and then I transitioned on to futures. I've been funded with Apex. I'm funded right now with Top Step, and I'm funded right now with Alpha Futures. I've received multiple payouts throughout the years, and on top of that, what I'm more proud of is I've been able to teach my best friend. I have one student, and I've been able to teach him how to trade. Started in June of 2025. The time of this recording is in December of 2025. It took him 4 months to get profitable. Took him 4 months to get his first funded and his first payout in 4 months. And now, 6 months later, he has four funded accounts with Top Step and with Alpha Futures. So I'm very proud of that. And I'm hoping I can replicate that with you guys. Okay. So thank you for being here. Let's go ahead and get this started. So, what is futures trading, right? In one sentence, if I could try to dumb it down in one sentence, we're buying or selling a contract that bets on the future price of something, hoping to make money as the price goes up or down. If I can make it even simpler than that, we're speculators. We predict, okay? We're speculating that the price of gold is going to go up or down. Whatever we speculate, if it does go up or down, we'll make money. Okay. If we speculate that the price of gold is going to go up and it does, we make money. If we speculate that the price of gold is going to go down and it does, we make money. Okay. We're speculators. We buy or sell a contract that bets on the future price of something, hoping to make money if it goes up or down. Okay. So, business, right? There's many ways that people trade. There's many participants in the futures trading market. Okay, there's business and there's speculators. We're speculators, and business also participates as well, except they participate a little bit differently. In business, for example, airliners have to purchase fuel for their planes. However, instead of worrying about the price going up and down on them, they form a futures contract, a contract for the future. Okay. Just like any contract, I guess, right? A contract, if you're in a music industry or whatever, you're in business, you form a contract with the manufacturer, right? Just keep it to this one right here. They form a contract for fuel with gas companies to buy fuel at $100 a gallon for a year. Okay. American Airlines makes a deal with Shell for $100 a gallon for fuel for 1 year flat rate. So if the prices go higher during the contract, the airliners are in a good deal. Okay, thank goodness we did it at $100 a gallon because now it's at $150 a gallon. Like we're in a good deal. Vice versa. If the price of fuel drops and it's at 60, 70, now they're like, man, like we actually kind of in a bad deal here. Maybe we got to kind of change the prices or whatnot. So futures contracts help regulate the economy. If the price of fuel skyrockets and they're at $100 a gallon and it goes to 150, 200, they're in $100 a gallon, so they can keep ticket prices around the same. They don't have to just jack up ticket prices. And there's many examples of manufacturers and companies, making deals with each other to help regulate and to help lock price. So thank goodness for futures. So we also have trading examples, right? That was business. Now we're talking speculation and speculators. We are speculators, right? We buy a contract or we make an agreement with the broker. The broker is where we give them our money. It's a company where we give them our money to participate. Let's keep it simple. A broker is the same thing as a betting app. Let's say we use DraftKings, Price Picks, Underdog, Sleeper. We use these apps. Those are like brokers, right? For trading, we call them brokers. We deposit our money, We make an agreement with the broker that if price of gold goes up from here, we make money based off the agreement. Vice versa. If we believe that the Nasdaq, you might have heard the Nasdaq before, the S&P 500, if we think that the S&P 500, the value of that will drop, then we're going to place it, we're going to sell a contract or make an agreement with the broker that if the price drops, we make money based on the agreement. So, you know, we're just like almost betting the over and under. Let's say we deposit money into Price Picks, the betting app. We deposit money into the broker. And on the betting app, we want the Broncos to go over or the Broncos to go under. It's the same thing with betting, with trading. If we want gold to go over or gold to go under. And if we're right, we make money. We're speculators, okay? Except the difference between gambling and speculating is that we use analytics, we use an analysis, technical analysis, and we use a strategy that's proven over time. Okay, we're not gambling and just hoping. Oh, I hope LeBron goes over. I hope. No, we're actually speculating professionally. Okay, but this is trading, and this is what trading futures is. There's a difference though between trading futures, investing in stocks, and participating in forex. Okay, which we'll get into right here. Before that, though, what can we trade? So we know that we are speculators and that we're just predicting if gold goes up and down. But there's a bunch of stuff that we can trade. We can trade gold, silver, oil, copper, corn, coffee. There's a lot. So there's also things like the US 30, the Nasdaq, S&P 500. You can do crypto, interest rates, housing market rates, like just a bunch of stuff you can do. Okay, gold, silver, oil, and things like that, they're grouped in something called commodities. Okay, think of something like a hot commodity. Like this car is a hot commodity, a house is a hot commodity. Gold, silver, oil, copper, platinum, those are things that you can physically touch. That's why it's called a commodity. It's physical. Versus US 30, Nasdaq, S&P 500, those are stocks. You're just own a piece of it, but you don't physically have, you can't physically touch it, physically put Nike in your pocket. You could wear it, I guess, but it's not like gold, silver. We could wear it. Like this, where you actually own a piece of it. So commodities are gold, and one commodity is called gold. One commodity. The commodity by itself is silver. Commodity by itself is oil. But the whole group of them, the parent name of it, is called commodities, including gold, silver, oil. Same thing. Indices, right? One name of it, like US 30 by itself, is an index. It's an index of companies. Like if you look at a book and there's an index and it gives you like links and pages and all that stuff, it's an index, right? And plural will be indices. So the group, like if we're looking at it like as a list of them, we have Nasdaq, US 30, S&P 500. Those are indices, but US 30 is an index. Nasdaq is an index. S&P 500 is an index. S&P 500 is an index of 500 companies ranging from Apple, Amazon to Walgreens, Walmart, Starbucks, the top 500 companies. That's one index. The Nasdaq is also known as a Tech 100. It's a top 100 technological companies. Apple, Amazon, Microsoft, AI companies, Nvidia. Those are tech companies. That's one index. US 30, similar, 30 companies. Okay, these are indices. You could also trade crypto, interest rates. Okay, you see on the bottom, what we focus on in GNS is the three indices and the commodity gold. So, what is the difference between um, futures, stocks, and forex? I'm gonna try to keep this simple. Okay, in futures, we don't own a share or have any ownership of a company. In stocks, you do. In futures, we're simply making an agreement with the broker to predict if the value of an asset will go up or down. In futures, we are just speculating or predicting if the value is going to go up or down. That's it. In stocks, you need the company to go up, right? Right? When you buy Nike, Apple, Amazon, you need the value of the company to go up. Futures, we don't need the value of the company to go up. We just predict if it goes up or down, and if it does, we make money. In stocks, you actually own a part of that company, you're partial owner, and in futures, you're not owning anything, you're just predicting. just like betting. When you place a bet and you're going over on the Broncos, you don't own a piece of the Broncos. You're not invested in the Broncos. You just want the Broncos to win, or vice versa. If you want to be betting under for the Broncos, you don't want you don't you're not owned. You don't care the value of the Broncos go up or down. You just want them to lose. You're going on the under. So it's the same thing with futures. We don't have ownership. We just predicting if it goes up or down the value. Stocks, you do have ownership and you need to go up. Okay. Forex, completely different beast. Okay. That's how I started. We all participate in Forex when we go out of town, right? Let's say we're going to Mexico. We have a dollar. We go to a foreign exchange booth or a foreign exchange kiosk and we give them a dollar. We get 18 pesos back so that we can spend it in Mexico. Let's say we're done with our trip in Mexico. We go back to that booth, that kiosk. There's a person there. We give him 18 pesos. Can I have my money back, my American dollars back? And you get $2 back. You just made a profit, but it was based off of foreign exchange, the participation of foreign exchanging foreign currencies. That's what foreign exchange is. Um, and vice versa. Let's say you go back to that booth and you give them 18 pesos and you get 50 cents back. Well, you just lost money. You ended up not making a profit. So foreign exchange is literally participating in and hoping that the value of currencies go up or down and whatnot. Okay, stocks is about a company and you want it to go up, and futures, you don't own anything. You just are predicting, speculating if a value will go up or down. Okay. So, who participates in futures, right? We have many institutions that participate in futures. We have um, speculators like us. We are called retail traders, okay? So, when you see on Instagram, YouTube, TikTok, retail trading, retail stuff, we are retail traders, people that trade at home on the computer. Um, we're retail traders. We don't work for Chase, Goldman Sachs, Lehman Brothers. We don't work for those guys. Those are institutions and hedge funds. They have a huge amount of money, a whole two floors of traders, and they're trading the hedge fund money to make money for the company. Okay. And then there's also manufacturers that participate in trading, right? Or in futures contracts and creating contracts. So that's why you see on the little pie graph here, 23% of the participants of the market is retail, because we're using our money, we're using prop firm money. We make a small percentage. Now imagine, how much money Goldman Sachs, Bank of America, Chase, uh, Fidelity, um, uh, all these uh, all these companies, Liberty Mutual, all these companies that um, have millions, billions of dollars, and they are able to bet or speculate as well. So they are a huge chunk. 77% of the money in the market is by manufacturer, by in institutions and hedge funds, manufacturers. They move the market. Okay. So when can you trade futures? The futures market is open 6 days a week from Sunday afternoon to Friday afternoon. Every day has a 1 hour break. Sunday, 6 p.m. Eastern Time. Friday, 4:15 Eastern Time. Every day the market halts and takes a break from 5 p.m. to 6 p.m. Okay. What we do in GNS Academy, we trade Monday through Friday from 9:30 in the morning to 9:30 Eastern Time to 11 Eastern Time. Okay. If you see on the left here, that's going to be during the New York session. There are 3 sessions. Okay. 3 major sessions. New York session, we have London session, we have Asian session. Um, there it is right there. New York session, London session, Asian session. You can see the times and when they run. GNS Academy, we're trading from 9:30 Eastern time to 11 Eastern time. Okay, 11 in the morning Eastern time. Okay, so where can you trade? You could trade anywhere on with Wi-Fi or your phone internet service on any type of device. Of course, it has a screen or whatever, and it has a Safari, Chrome. Um, so you'll see that here. You could trade at your house, anywhere with internet connection. You could trade at work. You could trade on a cell phone, tablet, laptop, computer, as long as you have some type of web browser where you could log onto the websites. Okay. What are these websites? Well, you have these brokers where you deposit your own money, your own capital, and then you have these websites where they give you money. They're called a prop firm. Okay, a proprietary firm. They've been here for a long time, where people used to go in person. They apply, they wear their suit and tie. Oh, I want to trade with you guys. I want to, because you guys have a lot of money, and then we'll make money together. Now it's all digital, it's all online. You just apply online. You apply, see if they take you, if you're good enough, and then they give you money to trade. Okay, so that's where you can trade. Okay, so how can you trade? Um, we have things called ICT concepts. There's a billion different strategies out there. Okay, in GNS we use ICT. Um, we How do you trade as well? You have to have risk management, and how do you trade? We use prop firms, but also use your own money. ICT concepts we'll talk to in future PowerPoints. It's the way we trade the markets based off of things called fair value gaps, liquidity, and we use EMAs as well. We'll get into more depth in that. Risk management is not just talking about money, but also emotions. So managing your risk, managing your emotions. No matter what strategy you use, support and resistance, supply and demand, trend lines, ICT, SMC, Jesus, whatever, EMAs, you won't be profitable and consistent until you can manage your money and you can manage your emotions. Okay, that's the hardest part about trading. That's how to trade though. And prop firms. Before we use our own money, our hard-earned 9 to 5 money, deposited into the freaking broker, and we would risk our own capital. And the more capital that you had, the more you could risk. Now companies loan you a sum of money instead of putting $500 into your account every 2 weeks. Now we could trade with $50,000 with a company like Top Step, okay, company like Apex, company like Alpha. They'll give you money, and then you trade with their money. And then when you request money, a payout to get paid, they take a percentage of it, but you get a big percentage. Okay, those are called prop firms. So how does a market move? We have things called uptrends, downtrends, consolidation. Okay, think of a mountain. A mountain, it goes uphill, and it has like a little range area where it's kind of staying the same, and then it goes downhill. Okay, same thing here. An uptrend is when candles over time go in an upward direction. Okay, you'll see candles going up like a wave or like a snake, like a mountain going up. Downtrend is the opposite. Over time, the candles go in a downward direction. You will see candles on the chart going down like a snake. Look at the picture here. Uptrend from bottom to top. Over time, you can see the trend going up. And then downtrend. Down is going downhill, right? The third part would be consolidation or sideways. Is when you see the candles or the charts is kind of going like that, like just hanging out in a range, okay, or in the same area. They mean different things. We'll talk about that, but just these are key terms that you have to know as a trader before we can get into how to make money. You gotta know what an uptrend looks like, a downtrend looks like, and consolidation looks like, because we are using these words every day, all the time. Okay, quick little history. Now, how did trading start? Why are they called candlesticks? Why are we doing futures, right? So, futures trading started in 1848, Chicago Board of Trade. That's where trading started in America. It was in New York, it was in Chicago. And how did it start? Well, just like the airliners, making an agreement based off of the future price so that to get locked in. That started with farmers, and it started with merchants. Okay, for instance, corn farmers and cereal makers or whatever. I don't know anything. Um, in order for these cereal companies to keep cornflakes at $3 a box, they need to have a futures contract with the farmers to keep corn at 50 cents a pound for the next year. So that if the price of corn goes up $2, $3, they don't have to jack up the price of the cereal boxes. That's literally how they did. They locked in prices for future crops. That's it. That's how they did it. That's how they do it today. Okay. That's like the original business way of making future contracts. Now, of course, we speculate. It's way different. Um, Candlesticks. They weren't always just candlesticks. You can see on the screen here. You can see on the screen with that guy there. They weren't always candlesticks. It didn't look like that all the time. That we use line graphs, bar graphs, um, chalkboards back then. In America, it was a chalkboard, a vertical chalkboard, and there's a line in the middle. and then it'll be like Jackson is in a trade for the, is in a trade for oil and is predicting for it to go up and at this price and wants to go at this price. And then on the other right side, you would have, um, Daniel or Mondo or whoever, going for sales and whatnot on gold on this, and it was just absolutely insane. You really couldn't even tell what price, was at the moment. It was pretty hard. Thank goodness we have Japanese candlesticks. However, they came from this guy, Mr. Homa. He was a rice merchant. So the same thing with these farmers, the corn merchants and whatnot, they did with rice. I want to make an agreement to keep it at, 1 pound of rice for $1 for a year. They were doing that in China and Japanese in Japan, except he decided to keep track of price with these things called candlesticks. And it was a secret in the 18th century, in the 1700s. That's what they're using, and it remained a secret until it was introduced by Steve Neeson in America in the 1900s. It changed everything. Now, coming to today, in 2023, and before I was starting in 2021, uh, and I was on and off, and we're doing forex. Okay, forex is foreign exchange, so it's overseas stuff. The companies that we're using to trade, like the brokers and like the prop firms that we were trading with, they were overseas. They're based in London, Dubai, Australia. There's not heavy regulation like that. American traders are very vulnerable. So these companies were able to screw us a lot. Um, and it was all conspiracy. They made me lose. They took me out of my trade. They're not letting me enter a trade. They're changing the price. I was here, but now I was here. That was all. People used to think that was an excuse. No, I mean I never used it as an excuse, but yeah, I mean everyone talked about it, and it was actually true. The SEC, the CTEC, I believe, the commissions of trading and of commodities. They went ahead and did an investigation on this prop firm called My Forex Funds. They were huge. They paid out a lot of people, but they also did a lot of illegal stuff, making people lose on purpose, changing the price of assets, and just like doing a bunch of illegal stuff. All the assets were seized. No one could buy any more accounts. No one could get payouts anymore. And the CEO of My Forex Funds, all the assets were seized. His bank accounts, everything was closed, and there was a whole court case going on it. Look it up, My Forex Fund Scandal on YouTube. You'll get more information on it if you like that stuff. So since then, I remember that September where me and my friend Jacob were like, man, what do we do? Like, and so people were transitioning to futures. That was the best thing that happened. We transitioned to the futures market, and where brokers and prop firms were based in America. Only Americans could trade in futures. People from overseas can't trade into futures, and they're heavily regulated to protect traders and to protect the industry. It makes the industry more safer, more cleaner, more legit, less scammy, and additionally, it protects us. So futures is way better, and thankfully, you guys don't have to go through that. Okay, so what is a Japanese candlestick, right? We just talked about this guy um, that introduced the candlesticks, but what is it? We're going to get into this very briefly. The next PowerPoint, the next video is going to talk about candlesticks, dojis, engulfings, what they mean, and we're going to actually decipher the language and make it really interesting, because trading and looking at charts is a legit language. When you see the charts and the candlesticks, you just see it, you're like, wow, what does that mean? Like, how am I supposed to do this? What I'm going to teach you is how to actually understand it in English so that you could make a lot of money. Okay. But what does a candlestick consist of? A body and a wick. Okay. Every candle has a body, but not every candle has a wick. The body is the color or the shape of a candle. So if you look here, you're gonna have this big red candle, this big green candle. The color, the big chunk, is the body. You can see it right there in the middle. It says body, right? Um, the body has various sizes. I don't think there's one candle that is the same. Each one is a little different. Okay, it's gonna be a small little thin body. It'll be a regular square body, or it might be a huge rectangle body. Okay, um, that's just know that's the body. Okay, and then the other side of that is the wicks. Okay, that's what they're called, candlesticks. There's wicks on a candle, so there's wicks. There's a upper wick. If you see a line on top of the body, like you see in the picture, that's the wick, right? And the bottom is the wick too. Here's the thing: the wicks are like bodies. There's long wicks, there are short wicks, medium-sized wicks. Sometimes there's a body and there's a wick on the top, not the bottom. Sometimes on the body there's a wick on the bottom, not the top. Sometimes it's long, sometimes it's short. Each kind of looks different. Just know what a wick is and what the body is, because we are going to talk about wicks every single day, every single morning. We say, oh, look at the wick. I don't like that wick. Okay, if you don't know what the heck a wick is, you got to know before we can go into how to make money with it. So a wick, you can see it here in the picture. Okay. Now, the meaning is going to vary because there's so many different size candles. We're going to get into that in the next PowerPoint, I promise. But generally speaking, each candle starts as nothing, and then it grows, goes up, goes down, goes up, goes down, and then it creates a wick. It creates a wick, and then it creates a body. Okay. When the candle is finished and printed, because we're going to use that word a lot, the candle is printed. When the candle is finished and done, and then the next candle starts as nothing and goes up and down, when that candle is printed, that's where you can determine a lot of information. You can see where it started, where it finished, the highest point of the candle, the lowest point of the candle. Okay, we'll get into that. But just to let you know, every candle has a body. Not every candle has a wick. The body is like the color and like the chunk, the rectangle. The wicks are the thin lines. Okay, so TradingView. What is TradingView? TradingView is a website. It's an app as well, and it allows us to use the charts, see the charts, see the price, and see the candlesticks, and it allows us to trade. The way we use it, and the way generally people use it, they back test and they enter trades. Back testing is a form of practice. If you've been in sports like football, um, it's like film study. You're gonna go back and look at old film. Man, I could have done this better. I could have done that better. I'm gonna look at my opponent. Let's see, like, how do they usually act when this happens? How do they act when this happens? And how would I respond? It's the same thing with trading. Let's say we want to study gold. We want to study the S&P 500. We're going to practice. We're going to go back in time, back test. We're going to go back in time, and we're going to determine, would I have taken this trade? Should I take this trade? Is that a good trade? We're going to record the results if we win or lose, if we take the trade back in June, back in August, back in September, whatever month we decide to go back into. Check the price, see if we would have entered it based off our strategy, record the results on an Excel sheet. That'll give us confidence to take that trade tomorrow because we backtest a lot. Okay. And entering trades. TradingView we use to calculate our trades. How much money do we want to make? Where do we want price to go? And how to execute our trades. Okay. We'll get into this. This will probably be the last thing that we do is TradingView. Okay. But I just want to let you guys know, what is TradingView. You can customize your colors, customize a layout. You can have 3 charts on there, one chart. You can see different time frames, 1 minute however, I think like yearly. I think you get to. So we use a 4 hour, 15 minute. So we'll get into that soon. Great. So that was it. Okay. Um, in the Discord, if you're in there, you're gonna have a PowerPoint of this presentation. Sorry, a PDF of this presentation. You can use that if you want to. This stuff you really don't need to take notes on. It's just a history, okay? The next PowerPoints, take notes. This is not Netflix where you just chill, sit back, get the damn potato chips, and just watch. Take notes. Like, this could literally change your life, change your family's life. It's changed my life. It's changed other people's lives. Like, take it serious. Um, so this one was just a little, introduction. You're not The stuff that I taught you here is not really gonna make you money, but the next videos you have to know these stuff, okay? And it's gonna make you a lot of money. So you have the PDF of this PowerPoint. You have my video that you just watched. I'm gonna attach 2 more videos that you need to watch. They're like 6 minutes long and 8 minutes long. It's gonna be just pretty much what I talked about, but a little bit shorter, okay? Just so you have more information. Sometimes if you have another perspective of some of the same kind of topic, you can kind of grasp it a little bit better. So you're going to have additional videos to help you understand the information. Step 2, after you watch this video and then the 2 extra videos, there's going to be another PDF of another PowerPoint presentation, candlesticks and key levels. Okay. um Along with that is going to have a video just like this where I'm talking about every slide and help you understand it, okay? And then step 3, there's going to be additional videos to help you understand candlesticks and key levels. And we're just going to keep it going. After that, there's going to be fair value gap presentation PDF, fair value gap video with me, fair value gap videos. Then there's going to be liquidity PDF, liquidity presentation with me, and then liquidity videos. Then we're going to talk about the entry model. We're going to talk about a little bit more concepts. And then we're going to start. You guys will have a lot of videos of live sessions. Watch the live sessions. We'll have one on one classes. We'll have back testing sessions. And we'll really get into it and make money. Okay. But watch additional videos. Then watch the candlesticks video. And then watch additional videos for the candlesticks. So I want to say thank you. Give yourself a pat on the back for watching this video. Um, Believe it or not, there are people out there that trade, but they don't know what futures is. They don't know the difference between futures and stocks. A lot of people just want to know how to make money right now. We're gonna get to that, okay? This is just beginning of a very long journey for you. Um, we'll get into the bread and butter, the secret sauce, the trading strategy. Okay, we call it the AP model. Um, don't rush the process. The faster you try to make money, the further it goes. It's a super weird concept that you will surely understand. Okay, it's a lot of information, and it'll take a while to grasp it. You're not just gonna be able to, even if you watch all the videos today, right? All the videos that I gave you guys, watch them all today. You're not just gonna be able to wake up tomorrow and enter a trade. You're gonna take practice. We're gonna back test together. Here's the thing: being with GNS is going to cut your time in half, a fraction. Okay. Whatever it was going to take, however long it was going to take you to be by yourself and Google how to trade, and then you buy a freaking course where the guy in the Discord server doesn't care about you. He's just trying to make a lot of money off of you. Like, that's going to take you forever because it took me forever. Okay. Armando is a perfect example of getting your time cut in half. I taught him in June. 4 months later, he got funded in a payout, and 6 months later, he has 4 funded accounts with 2 companies. Okay, so Mondo is living proof. I wouldn't be teaching you this stuff if I wasn't able to teach someone else it. Okay, so stick with us. You're in the good hands. Um, and we're going to cut your time in half. Okay, everyone's time is going to be different, but your time is going to be cut in half. Okay, you have a huge learning curve being here in GNS. Okay, so thank you for watching this. Give yourself a pat on the back, and let's keep it going.